So a 12% overall expansion in deal activity this year is what your baseline forecast is. There are different kinds of deals. There are the PE deals that became so famous over the past couple of decades, and then there are more strategic deals, which we've begun to see in energy, we've begun to see them in pharma, and so forth. How does that split go? It's 12% overall, but is one going to be more dominant in terms of growth than the other?
They're pretty close. So we would expect about a 12% increase in corporate and a 13% increase in private equity. So not too far away.
So not too far away. And where, to the extent that you're able to look ahead, would you expect the deals of the strategic sort, the strategic combinations, to be sort of more prevalent? What sectors?
So the sectors that they're more prevalent in are the ones where the multiples have gone down because the cost of capital is still high. So you can't have high cost of capital and high multiples and expect M&A activity.
So not tech, not the big tech necessarily.
Well, the tech multiples actually have gone down a little bit year over year. So we are seeing a pickup. I mean, tech is behind, but they're still the most dominant player from a sector perspective. So we'd expect a small pickup in tech, but we're expecting a pickup in life sciences as well as in energy, which we've seen a lot of big energy deals announced in the last quarter.
Yeah, we certainly have. I mean, and the granddaddies of them all, Chevron have been active. Exxon, of course, doing their deal in the Permian area. Let's talk a little bit about cost of capital. How critical is it that interest rates, borrowing costs remain where they are or fall in order for your forecast of 12-13% growth to come true?
So for our baseline scenario assumes that the cost of capital will come down a point and a half. If it doesn't, then I think we're looking at less of a growth in M&A. So it's critical because, again, the multiples aren't coming down that significantly, so the cost of capital has to come down to see a reemergence of M&A. So
the strategic combinations you see are in bio and life sciences, maybe in energy. How about the PE area? Would it sort of track the same? Do you expect the PE firms, the Blackstones, the KKRs, the Carlyles to be active in that same area or in other ones?
In the same area, a lot of tech. There's a lot of PE activity in tech and in healthcare as well.
And where in tech specifically are you seeing it? I mean, obviously the big tend to get bigger in these circumstances.
Right. A lot around AI, trying to get in earlier around Gen AI and the fronts of there.
Yeah. So AI would be the area to look at. Who will be the active buyers? Let's talk about tech most specifically. Will it be the big whales in the business, the Metas, the Alphabets, the Amazons, the Microsofts, or whom?
I think it will be the big ones. The big ones still have a very robust M&A pipeline. Whether or not they're acting on it right now doesn't necessarily indicate that the pipeline isn't there. So there is still an active pipeline that they will act upon when the environment is right.
So the big guys will be the acquirers. Virtually anybody could be the acquiree in this case. And I assume, I don't know this to be the case. I assume if you're looking at life sciences, you're looking not only at large pharma that may be having a pipeline dearth, trouble in there, but don't have enough, so they're buying drugs. But it could be other companies as well, couldn't it?
Well, they're definitely looking to build. You know, there's patent cliffs coming, so they need new R&D. So a lot of it is buying new R&D, but they can also be looking into med tech and other areas like that.
Yeah.